Thanks so much for joining me on the podcast here today. How are you?
Hey, good to see you. Nice to meet you.
Super excited to chat here today. I like to usually just dive right in. Let's start by you having like a minute or two to tell the audience about Better. Let's assume they've never heard of Better before. What do you tell them?
Sure. Better is the leading online mortgage originator, mortgage lender. We've originated over $100 billion of mortgages in the past 8 years since we launched in 2016. And our goal is to make homeownership more affordable and more accessible for all Americans by leveraging technology and the latest innovations in AI to streamline the process, make it faster, make it cheaper, and make it a lot easier for the millions of Americans that buy, sell, or refinance a home, or get homeowners insurance or title insurance or life insurance or any of the other products that go in and around a home, every year.
And I know you and I were chatting a little bit before this. We're going to have the opportunity to see your voice agent, right? So
Totally.
if you want to share your screen, let's bring that up now. Let's start talking about it, and then we can go from there.
Oh, totally. Happy to do that. So about 2 months ago, we launched Betsy, which is the first AI voice agent for the U.S. mortgage industry. And to give you some context, what Betsy does is it is able to interact with our consumers, gather details about them, about their loan application, help them move along with tasks that they need to fulfill as part of their mortgage loan application, and basically take them all the way from customer service queries to actually helping them close their loan. What Betsy is aiming to do is create and democratize the access to mortgages for millions of people who simply can't get a mortgage because it's too expensive. And the reason why we needed Betsy is traditionally to get a mortgage, most mortgage companies, are employing thousands of people in call centers or in branches around the country. Those people typically would tend to work 9 to 5, and your typical homeowner tends to do their mortgage process in the evenings after they come home from work, or on the weekends when they're shopping for homes. So there's like an availability gap between when mortgage loan officers typically work and are able to be available to consumers, and when consumers want to go and buy homes or refinance their homes. And so to ease that gap, traditionally what we've done is we've employed hundreds of people who work all sorts of hours all across the country. And what we've done with Betsy is take all of that and make the consumer experience so much better, leveraging AI. So leveraging large language models, we've created the first voice-based AI agent in the mortgage industry. And, I'd love to just show you an example of what Betsy has been able to do for our customers. So, maybe I can play a call for you about Betsy calling a home buyer to move their application along. Let me just play that for you.
Hello?
Hello, this is Betsy, a virtual assistant with Better Mortgage, a trusted partner of LendingTree, calling on a recorded line. Is this Corey Smith?
Yes, this is him.
Great to meet you, Corey. I'm calling about your recent interest in a home equity line of credit on LendingTree. Do you have a minute to talk?
Yeah, I do actually.
Perfect. So I understand you're interested in a $50,000 loan. One of our experienced loan consultants can tailor a HELOC solution that's perfect for you. To do that, we just need to gather some income information about your work. Can you please tell me, are you self-employed or do you work for an employer?
Well, why do you need that information?
I completely understand your concern. We need this information to ensure we tailor the best HELOC solution for you based on your income. Your financial situation helps us provide you with the most suitable options. Can you please share if you are self-employed, work for an employer, or both?
Well, I have my own company and I also work part-time for an employer.
Got it. Thank you for sharing that, Corey. Let's start by gathering your annual income from your own company. Can you please tell me how much you earn annually from your own company?
That comes out to about $50,000 a year.
Thank you for sharing that, Corey. Now let's move on to your part-time job with your employer. Can you please tell me how much you earn annually from your part-time job with your employer?
That comes out to about $10,000 a year.
Thank you for providing that information, Corey. You've been very helpful. I'll connect you now with one of our skilled Better Mortgage loan consultants who will tailor a HELOC solution to fit your needs. Please wait a moment while I connect you.
Thank you very much.
While we're waiting for the loan consultant to join, what's your weather like today?
It's hot. I'm trying to stay cool during this home renovation.
That sounds like a busy day for you. Home renovations can be exciting, but also quite a task. Do you have any questions about HELOCs or Better Mortgage I can answer for you while we wait?
Yeah, I was wondering what sets Better Mortgage apart.
Better Mortgage stands out for its flexibility in offering various options tailored to your needs. This includes customizable draw periods, different loan terms, and the choice between receiving cash directly or having debts paid off on your behalf. We provide HELOCs and cash-out refinances to help you find the best solution for your situation. Does this cover what you were looking for?
Yes, it does. Thank you very much.
You're welcome. Looks like we have a loan consultant on the line. One moment while I connect you. Okay, Corey, I have our loan consultant on the line and they will go over the options with you. You are in great hands.
Hi, Corey. This is Tony with Better Mortgage. It looks like you are speaking to our virtual assistant, Betsy. I can now help guide you through your application moving forward.
Excellent. Thank you very much, Tony.
That is awesome.
So if you can think about what that means, right? What we've done is we've built Betsy on top of a platform that we started developing back in 2015 called Tinman. And Tinman was the first rules engine built for the mortgage industry. My technical partners in this were Eric Bernhardtson, who was the person who created the recommendation engine at Spotify. And we took the problem of matching the best mortgage to the best customer as simply similar to like, what is the type of music that you might want to listen to? So every mortgage has two components of data. The first is property data. So when the house is made, what's the value of the house? What is the volatility of the value of the house? What is the expected likelihood of home price appreciation? Things like that. And then a person. And the person has their credit score, has their income, has any particular obligations that they might have. And so, you try to get to what their credit worthiness is. And what we did there was take all the attributes. So Tinman collates the attributes about the consumer, collates the attributes about the property, and creates a consumer financial graph and a property data graph. And what we do is take all that data and then match it directly with 32 different mortgage investors all around the country, over 100, I would say over $2 trillion of demand across the board for purchasing mortgages each year, and basically matches the criteria that they have with the attributes the consumer and the property have, and effectively, through a rules engine, automates the process of capturing data, verifying data, making calculations, and then automating the process of going and getting a mortgage. Over the past 7 years, as we were developing Tinman, we've been able to take the mortgage process, which used to take the mortgage commitment process, where you start and apply for a mortgage, and then you're getting a commitment letter from the mortgage company that you can actually get the house, which used to take about 45 days. We've actually been able to bring that process down to under 1 day. So today, 82% of Better mortgages are one-day mortgages. And with the average consumer going from locking their rate with us to getting a commitment letter on their home in 8 hours. That's extraordinarily powerful for an American consumer, because they can literally choose to go to contract on their home and then have their mortgage done that same day. And that's an amazing value proposition, and it saves the consumer so much time, so much energy, and basically enables the consumer to bid on a home like if they were paying all cash. And so we've been able to just build this awesome company leveraging the one-day mortgage. What we realized, and so the way that we've applied AI to the traditional mortgage process, and particularly the process of automating the mortgage process, is effectively leveraging automated decisioning and multi-step automated decisioning, and having the machine do all of that rather than a person actually go and do each thing and move the process along. So for context, in the traditional mortgage sense, almost 28 people have to be involved in making a mortgage, from the loan assistant to the mortgage loan officer to the processor to the coordinator to the underwriter to the closer. And what we've been able to do is automate the bulk of the process so that today our employees are 4 times more productive than the average mortgage industry employee. So the average in 2023, for example, an average better loan officer did about 17.7 loans a month, whereas the industry average is something close to 3.5. And so we've leveraged effectively decisioning AI to automate a bulk of the process and to substantially lower the manufacturing costs and the people costs and the labor costs of making a mortgage. That being said, having automated the mortgage process wasn't good enough for us. What we then needed to do, and particularly with the launch of LLMs, we wanted to figure out how can we use this new technology to improve the customer experience for our customers. So what we've been focused on over the past year and a half is, since the advent of large language models, how could we apply this technology? Now, there's some who say, well, in lending, you can apply that to the actual lending process, to the actual credit decisioning process. In the mortgage market, the bulk of the credit decisions are driven by Fannie Mae and Freddie Mac. So you're really actually not in charge of credit when you're making a mortgage or decisioning credit. You're actually more in the process of deciding that a consumer meets the criteria set forth by the big government-sponsored enterprises that comprise 95% of the mortgage market. So we couldn't use LLMs to decision mortgages, right? Because fundamentally there's a chance for hallucinations, there's a chance for things to go wrong, and then those mortgages wouldn't meet the criteria set by Fannie Mae, Freddie Mac, or the FHA, and so you wouldn't have that. So what we started to do is figure out how can we use LLMs in the mortgage process to automate the extraction of data and to triangulate different pieces of data and automate getting that. So an example is pay stubs and missing information on pay stubs, or computing different types of income that you might have. So if you have, let's say, partnership income and small business income and K-1 income, being able to triangulate and figure all of that stuff out and actually put that income in the right places and then apply the right formulas to it. So that was an interesting use case. But then we're like, how does this continue? We're continuing to improve the automation of the mortgage process and make it faster for consumers and make it cheaper for consumers. How can we make it better for consumers? And we started working on our voice agent, because one of the things that we realized is in the mortgage industry, when you have peaks and lows. Right now, we're a bit in the low side of the mortgage industry because interest rates are so high. But what happens when we get back to peak? So in 2021, when we were at our peak, we did over $58 billion of loans in 1 year. We employed over 1,800 licensed loan officers that year. We employed over 700 loan assistants that year. Those 2,500 people, we spent over $250 million that year on people who were effectively helping consumers on the phone go through their mortgage process, answering questions, figuring out the best product for them, capturing data on a form, capturing missing data. And so we said, if the mortgage market comes back, how are we going to be able to satisfy that demand without having to go and hire 2,500 people again, right? And so we started working on Betsy, which is our voice AI agent, which I just played for you. And we believe that we're on the early innings of being able to take much of what a mortgage loan officer does and effectively have a AI agent handle that for it.
It's super interesting, just the interaction, and also to see how much better things have gotten with the communication and not overly the human tics, right? You'll have the occasional but remember how a few years, even a year or two ago, how it was overly, it would be whenever someone would try to implement those. And what I like about what you've built is, in the past, you might be on hold for a really long time, and then that information now is being collected all along seamlessly. So then when you do get to that final person, you can actually have an action happen versus the conversation just starting after. So I really like that you're helping you're helping kind of the whole experience, not just one side of the fence here. Let's talk about you. You already mentioned some of obviously the challenges in implementing this. Like, this is not an easy process. At where do you see things continuing to go from here, I guess, is my question.
Totally. So I would say, like, the challenges with a voice AI agent are pretty significant. So we had to figure out the latency problem, right? Because if you traditionally talk to a traditional LLM or a chatbot, right, there's a pause and then there's an extended period of time before it compiles that information. So we had to do a lot of training and leveraging smaller LLM models with deeper knowledge of the mortgage industry and the data sets to figure out what is a way that we could take the latency down from 3 seconds to what it is today, which is 800 milliseconds, which is basically mimics human speech. And so because we thought, like, at 3 seconds, consumers are just not going to adopt it and it's going to be too slow. And we've already seen that chatbots, like, don't really work because of both the latency, and then the chatbots is not sophisticated enough or communicate with the consumer in the way that they want to communicate. Like, our average customer is between 38 to 55 years of age, right? And they're not chatting as much as they want to talk to somebody on the phone about the process. The second thing that we had to work through as a challenge was what is the training data that we're going to use here? So you have to not inundate the LLM with so much training data that it goes, A, either hallucinates, or B, takes a long time. So what we had was the benefit, because we're fully digital, we had over 12 million customer phone calls that we have done in the 8 years that we've been live as a company. And we had AI go through the calls, perform a sentiment analysis, pick out the best ones with the best answers, and then effectively narrow it down so we could use that to be the training data set for what Betsy would learn and how she would interact with consumers and what sort of field range of answers that she might give to a bunch of consumers. And then the last thing that we did was we took some of our best loan officers and we actually had them answer the same questions that Betsy was getting, and effectively continuously refine what Betsy is doing in terms of answers to be able to get into a place where Betsy is able to really have an empathetic answer to every customer situation, is able to, and is able to be able to answer the question while not triggering anything related to regulation. Because the other thing we had to deal with, and the last thing that we had to deal with, was mortgage regulation, where you actually have to be a licensed mortgage loan officer with the U.S. government. You have what is called a National Mortgage Licensing Service, ID, in order to actually quote rates to a consumer and discuss interest rates and product features to a consumer. So we had to make sure that we were providing answers that are rich enough and yet not getting into a discussion about interest rates, other than necessarily providing templated answers. Now, what I find interesting, and we're working with the FHA and the licensing service, is that on my website or in my mobile, I can quote rates. The computer can quote rates. So why is it that Betsy can't quote rates, right? Because Betsy is simply a computer with a voice. And so, we're trying to figure out these types of things as sort of we go along, and, confront regulators with questions that they've never thought of answering before, and, a use case that they really hadn't thought about before. So I would say those are some of the challenges that we confronted along the way and what we're solving. I think where this goes next is, I think Betsy gets richer and richer in its application for the mortgage process. Betsy goes from not only being able to, over time, quote rates and products, but actually in real time on a screen show you if you pick, let's say, a 30-year fixed rate mortgage or a floating rate mortgage, a 5-1 arm or a 7-1 arm, what your payment schedules are going to look like, what you might choose to do, asking you questions that, sometimes, might be very relevant to the mortgage process, but a traditional loan officer might not ask. How long do you plan to stay in the house? Is this a starter home or is this your forever home? Because those types of things might help you decide better whether you want a cheaper rate or you want to pay some points and fees up front or pay an origination fee. Those are the types of things that we hope over time Betsy will be able to do.
I want to shift focus here as we start to wrap up for a second too. By the way, congratulations on everything that you've built. This is super exciting.
Thank you.
There's a lot of people that their PTSD is slowly going away from being on hold for such a long time for these tasks. So thank you for what you're doing. I would love to hear your thoughts on the HumanX event. It's going to be exciting. I'm so pumped for it. March is going to be here before we know it, but would love to hear what you're most excited about from this event.
I think the things that I'm most excited about is how the application of AI in non-regulated industries, because I think it provides us a template and a roadmap to going forward what happens next, right? I'm excited about companies that are making AI avatars and effectively enabling the AI avatar to walk a consumer through a variety of different processes that they have to go through in their life, and answer questions and things like that. I'm excited to understand what level of process automation that AI agents are going to be able to do. Because there's still so many things, we employ still 600 people in processing loans and taking data off a page and computing things and checking facts and staring and comparing. So, there are agents that are now doing 1, 2, 3 level processes, but they do 7 level processes, 9 level processes, and level of complexity and how far they can go along the way. I'm really excited, most of all, to learn about how others are implementing AI in their businesses and generating business value out of it.
I love it. Well, I'm excited. Let's definitely connect there, and we'll have to do an in-person interview, and we'll definitely stay in touch. Thank you so much for showing us a cool demo. We don't have that happen enough, so I really like the uniqueness.
Awesome. Thank you so much, Jared, for having me on the podcast. I really appreciate it, and I look forward to seeing you at HumanX.
Absolutely.
All right, take care.